in any minute now. So I'm handing it over to you, Gabriel, for conducting this seminar, moderating this seminar. So I will go invisible. And so welcome to all of you to International Blockchain Olympiad 2021. We have had more than 50 teams from 12 countries participating in this year's Blockchain Olympiad. And the award ceremony would be held at 6:30 p.m. this evening, Dhaka time. And so we are also most welcome to join that online. So with that note, Gabriel, it's over to you. And thank you once again for joining us.
Okay, so shall we wait for Mr. Islam and Mr. Riaz until they join, until we start?
Well, the meeting you said was for at 7:30, so they theoretically still have some time.
Are we actually live right now? This is one of the weird questions about online and offline.
Yeah, we are live. I think we are live.
So we are live, right? We are sitting on the stage.
Yes.
We don't know we're on the stage or not.
Exactly.
Misha,
how's it going?
Okay.
Julian, great to see you. It's been a while.
Okay, great. Well, why don't we get started with a round of introductions for the rest of the audience, and we can tell a bit about ourselves. So I'll start first. So I'm Gabriel. I'm from Canada, and I started this Blockchain Olympiad movement with Dr. Lawrence Ma and Marina and a few others from around the world a few years ago, 4 years ago. Yeah, and our aim was to give students a chance to learn about how to build blockchain applications and blockchain solutions, because blockchain is a very new thing, and it's also a very complex thing. And the reason why we have a Fintech panel is because we can't stray very far from Fintech if we talk about blockchain. So yes, without further ado, I'll pass the mic to, let's say, Julian or Julian. Which one do you prefer?
Whichever. I mean, usually it's Julian. So I'm known as Julian, named Julian, but yeah. So it's a pleasure to be here as well. And as always, I want to congratulate you to arrange this. And I mean, you've started this already long before, as I can hear. And I've been a juror as well. So I've seen a lot of concepts yesterday, and some of the students were very active. So they approached me online, and so I even looked at other projects, not just the ones that were assigned to me. And I must say it's very interesting. I mean, there are some very interesting ideas that have come up, and it's great that it's across all these countries. I mean, there's so many countries involved already. So congratulations to that. About myself, so my name is as mentioned, Julian Weber. I am running a software house in Dhaka. It's our main location, but we have substantial business in Europe as well, and we do primarily we have various industries, but we have a very strong edge on fintech, financial solutions, insurtech solutions that we're building with some of our own components, but also many, like 4 others. So yeah, that's all about me. I'm in the blockchain space actually since the very beginning. I've been always very fascinated with the whole cryptocurrency movement and what's happening there. And I think now it's a super exciting time. Last year we thought it's a bit overhyped, but the whole thing has been coming back very strongly, especially with the initiatives such as Cardano, which now have sort of made a breakthrough with their releases, and then also Ethereum which has been able to deliver to a lot of its promises. And yeah, I'm using cryptocurrency a lot myself. I have a portfolio. I do different kinds of transactions and also developments in the space. And I look forward to discuss with you all.
Okay, great. Let's pass the mic to Chris. Thank you, Julian and Chris, by the way, for joining us so early in the morning.
I'm in Dhaka. It's fine for me.
Are you? Is Julian Dutch too then?
No.
So yeah, okay. So hi. Well, thank you for that, Julian, and thank you
our
for,
friend Riaz has joined as well. I just see. So that's good.
Oh, that's good to see.
Yeah.
Hi, good morning. Sorry for the delay to join. I was kept in the waiting room. So somebody very kindly let me in now. Thank you.
Thank you for joining. You're a very important part of this discussion. We're doing a round of interviews now. So Julian just went. I just went. Next is Chris.
Yep, that's me. Hi. I'm busy with trying to get the best out of people. So this makes me a teacher, I guess. And I run two blockchain labs here in the Netherlands. Well, two blockchain labs. I run two labs, one of them in blockchain. And well, I'm still quite, well, I would not say young in the technology, but young as a lab leader. So I don't have an extensive track record like Julian does, or some of the others that are here. But I'm very interested to see what technologies these people have come up with, and to discuss this with all of you and to poke your mind on it. I'm sure this will bring some very interesting discussions.
You're on mute.
Sorry, can you repeat the question?
Now, thank you, Chris. Would like to introduce Misha Ali, Mr. Misha Ali, who makes a quick introduction about himself.
Sure, thanks. Hi, my name is Misha Ali, as mentioned. First of all, thank you to the International Blockchain Olympiad, Gabriel, Mr. Habibullah Karim, for inviting me. Thanks to the ICT Ministry and the initiatives of the Honorable Prime Minister of Bangladesh for putting this all together. I have been in the blockchain space for roughly 1 year now only. I'm relatively a new entrant, but I came in head first and I'm well into it now. I work for a centralized exchange out of Dubai called Facet, and we're also launching DeFi products, what we call CDeFi or centralized DeFi. So I've been working on that for the last 12 months. Before that, I was the head of Uber Eats here in Bangladesh, and I have been in the startup ecosystem for roughly 5 to 7 years here in the Bangladeshi space.
Thank you, Mr. Ali. And next, I would like to give the mic to Mr. Riaz to do a quick intro for himself.
Thank you so much. Again, my apologies for the delayed connection. It's really great to be join this excellent initiative. My sincere thanks to the organizers of the Blockchain Olympiad, and particularly Mr. Habibullah Karim. So I am Masroor Riaz. I'm chairman and CEO of Policy Exchange, which is an economic policy and investment advisory platform. I'm a private and financial sector economist by training and experience. I was with the World Bank Group for 11 years, leading policy and institutional framework, both for private investment as well as for financial development, including digital finance. I'm perhaps the least of the least technically capable person today on the screen in terms of blockchain or technology, but I do work on the enabling environment and look forward to learning a lot more from the learned panel here. Thank you.
Blockchain is a new technology, so we're all learning. So thank you for being humble. Last but not least, Mr. Islam from the IDRA. Actually, is Mr. Islam able to turn on the video? Thank you very much. Mr. Islam, thank you for joining us today on behalf of IDRA, the Insurance Authority. Please give a quick introduction about yourself and the authority so the audience can learn about what you guys do.
Assalamu alaikum. Good morning to you all. I am Moinul Islam, member IDRA. I have actually worked with the government for around 33 to 34 years. And after going on to retirement, I have joined the IDRA on contract basis as a member of the authority. So I actually come with audit background. I belong to the audit cadre of the government. And then I worked in a project as a financial management specialist, and also joined the government as deputy secretary and went on working mostly in finance division, Ministry of Finance. Later, I worked with the Bangladesh Investment Development Authority as executive member. So I have combination of working on various fields, mostly with finance, macroeconomic management of the government, and audit. Now I'm working in the insurance sector, which is new to me, and I've been working here around about 1 year. And we have a project, Bangladesh Insurance Sector Development Project, which has a component that will include developing RegTech, SupTech for us, which I think, though I'm not an IT person and also lack the technical knowledge in the IT fields, but I think that is a part of the fintech, possibly for the insurance sector. There may be other features as well of the fintech. So also, I must point out that I have stepped in the shoes of my chairman. He was supposed to be here, but for certain personal reasons, he couldn't attend, and he requested me to join this meeting. Thank you so much.
Well, thank you. So now that everyone has a quick intro of our panel, let me set the stage. So the reason why this panel is called Fintech, by the way, financial technology, for those who don't know. And for those who may be wondering why insurance is also here, is because there's many aspects of insurance and insurance tech that is also basically makes it an extension of fintech and RegTech in general, regulatory technology. Can't stray very far from fintech without running into regulations, of course, right? And insurance being a very highly regulated industry. So first, let's set a few house rules here. So we tend to fall back to our native tongue when we think complex thoughts, but please try to keep it in English and not much Bangla or Deutsch today. And secondly, please feel free to interrupt each other because this is a panel, of course. If this was a real panel, in real life, we would be on stage and probably interrupting each other very often. If you want to softly interrupt each other, please use the raise hand function. And now the panel today consists of basically two sides of the coin. We have the makers and the shakers, right? We have the rule makers. Rule makers would be the authority, represented by Mr. Islam today, and the policy guy, Mr. Riaz. Yeah, you guys are on one side, and on the other side, the shakers, or maybe the rule breakers, right? Because you guys are entrepreneurs, right? Mr. Michelle Ali, Julian, and Chris, you guys are the startup guys. So this is why we set it up to have opposing points of view. So let's start this discussion with something rather gentle. Let's go around and what is fintech to you guys? Let's start first with the let's start with the policymaker first, Mr. Riaz. what does fintech mean to you?
Wow, I think this reminds us. Sometimes we take things for granted. This pushes me into deep thought. No, but I'll try to give a very simple answer to that. Fintech is basically application of technology in delivering financial services. I think that's the simplest form that I get to see. But of course, when you delve deeper underneath that line, there can be many subsegments, many layers of complexity, many layers of many different forms, let's say, right? But I don't know how much time we have. I was supposed to speak a few minutes or just...
Let's say 2 or 3 minutes.
Okay, so I'll be brief, I think, on the... So it's fintech. I think the overarching statement to me, the way I see that is delivery of financial services through application of technology. But when you go deeper into that, I think it's the delivery itself is grounded into many other pillars, right? And then application of technology in those pillars, which enable the delivery, ultimate delivery of the services, they themselves also come within the purview of fintech, a design of a financial services, the enabling environment, which is not only policy and regulatory issues, but infrastructure, for example. So there is the front end, which is the digital financial services delivery. Then there is perhaps the front side of the or the lead part of the back end, where you do the design, you do the operations or the maneuvering in order to deliver. And then, you go to the most fundamental part, where you have the enabling drivers, such as digital infrastructure, which enable fintech delivery. So this whole ecosystem together, which enable delivery of financial services, whether it's banking, payments, insurance, or any other form of financial services, to me is digital financial services or fintech.
That's great, as expected from the policy guy. A very comprehensive definition. Let's move to the breaker side. Could we maybe have Julian? You create a lot of financial products and capital products. Your company, yeah. What do you think fintech is? You probably make fintech all the time.
Well, I think generally I wouldn't have much to add to what Professor Masroor Riaz just mentioned and how he defined it. I think from a definition viewpoint, the interesting thing about it is really the automation potential with fintech. Basically, the ability to define how money flows from one or many parties to other parties based on what rules. It's very interesting now in the DeFi space, right, where you basically start to completely automate and completely take out human error and human interpretation from the delivery side of financial services, right? So the consumers, you and I, we all have a need to have, to do things with our savings, to do investments, to do future planning, etc. But then who are we dealing with? And I think when we deal with fintech-based solutions, the ultimate goal is really that these solutions are completely automated, be it in the insurance space, be it in the banking space. And all those decentralized platforms, I think, are now really taking this to the next level.
Great. Thank you for that. Let's move on to, since we touched on the crypto world a bit, Mr. Misha Ali.
Thank you. So thanks, Julian, for that. And thanks, Mr. Riaz, as well. I think what I'd like to do is take a step back. So I think the ultimate, why is fintech important? Because we still have billions of people in this world who are unbanked or don't have access to financial services. So through automation, what are we really doing? We are either through technology enabling them to access the financial system or financial services, or through automation and technology, we're reducing the cost of these services to the point where people who are at a certain, let's say, income level or socioeconomic strata can then, it makes sense for them to access these financial services. So I think, ultimately, what we're really trying to do with fintech is increase access to financial services and include or be inclusive of, let's say, the unbanked or the billions of people on Earth who are still unbanked or don't have access to these services.
Perfect. Yes, that's a great vision and overall the vision of the DeFi space. Let's move back to the rule makers. Is Mr. Islam still with us?
Yeah. Yes.
Yeah. So
I've
from
been all along here and listening to what all the experts are saying. If I think about the insurance sector, if I think about the regulators' duties, then to me, first, the important issue is supervision and monitoring. And through using fintech, I think we can get all the information and minimize the errors or mistakes or the kind of information that the companies don't want to share, so they cannot manipulate the data. So we need to get all the information that we need to protect the policy holders and everybody else, and also keep them watch over them. That is one thing, monitoring. And also, as Mr. Mishali has pointed out, it is important, this fintech is important for inclusion and penetration of the industry. Because in Bangladesh, insurance penetration is very low. It is only 0.5% of GDP. Compared to even South Asian countries, India is close to 4%, and there are other countries which are more than Bangladesh for insurance sector market share. So for me, this is two important issues. One is supervision regulation, and another is inclusion, because you can reach out to many more people. As the other experts has pointed out, the cost of access and cost of doing business or taking products, the benefits of the products, that will be reduced, and people, you can reach out to more people and go to parts of the country where the insurance companies have difficulties to reach because of cost consideration. So that's, I think, from my side.
that's fintech. Okay, great. And finally, back to the EU, Chris, last but not least.
No, that's okay. What fintech means to me, when I think of it, it's the impact it could potentially have for normal everyday people. So I'm talking farmers being able to get a more favorable loan, or export companies getting a faster license to export to certain countries or meeting regulatory standards there. And as I said before, the unbanking the unbanked, the possibilities, what it would mean for people to be able to order products from anywhere around the world, wherever they are, and do business wherever they want to go, and to have, if there are settlements in insurance, for example, to have that negotiated automatically without a who is to blame factor into it, or an emotional factor into it. It's just a machine processing its logic, as it were. What that would mean for people. So I'm sitting here in comfortable Europe, being very affluent and wealthy, or shall they say, we know, of course. I'm hopeful, and with this technology, that we can make that a reality for everybody around the world. And this technology might have the ability to, if it needs, at the very least, help towards that cause. and do a very important step. For money, we share it all, right, between each other.
We all love money, right? Which is why we're working so hard every day. So I have to be transparent with everyone in the spirit of blockchain, right? I did not do much preparation, but I did try to prepare a framework for today's discussion so that we wouldn't be all over the place. And I'm glad that everyone basically touched on 3 pillars of fintech, right? Number 1 is the service aspect of it. Being able to deliver, as Dr. Riaz has mentioned multiple times, on the delivery of services. And of course, the inclusiveness and the access to finance, as some of the other panelists have mentioned, and some automation. And automation is to create much better services. So service is one aspect we would like to think about. The second aspect would be trust, because trust is the thing that stands in the way of much of this inclusivity and access. As the unbanked have been mentioned a few times, I think, by Misha, right? So the reason why, because people are unbanked, is because they don't have the adequate identity, and no identity, no trust, and they cannot participate in the services. We're hoping that with blockchain and self-sovereign identity, this could be the first step that we can change. So service and trust. And the final third thing would be the efficiency of capital deployment. Once you have all these pieces in place, how do you enable and deliver these things? Again, a lot of automation and access and services all intertwined. And today we'd like to focus our discussion around these 3 themes. One might say that using the analogy of food, right? We can go down to the streets of Dhaka and pick up some of the nice street food there, or we walk around the streets of Hong Kong, pick up the nice street food here. At the end of the day, those are different forms, and the ingredients are still the same, which is like, the base ingredients. And service, trust, and capital would be the main ingredients of finance, and therefore fintech in general. So now I'm going to put off a question for everyone. So for the rule makers, what services would you like to see to be made better in the fintech space? And the rule breakers, like what service do you want to offer, and how do you want to push the envelope of this? Like, for example, do we need more or less regulation, friendlier regulation, whatever that means? This is a time where I'd say there's an open mic. Feel free to talk among yourselves, and I try to moderate. Of course, I'm the moderator, so I'm not supposed to be at the center of this discussion. Thank you.
I'd say for the rule breakers, as you say, right? Or the groundbreakers, the access to insurance, the ease of access to insurance, the regulatory barriers to entry, the allotted amounts back to people. So the negotiation part of that's, I think, very important aspects from our side, but feel free to add.
Sure. I will just also add trust. So here in Bangladesh, I think if you look at the e-commerce industry, in emerging markets in general, I think trust is a big factor when it comes to emerging technologies, and there's often a lack of trust, and that's often founded. And if you look at Bangladesh, recently we've had a company basically go under with millions and millions, tens of millions, close to, more than that, who knows, maybe close to $100 million in debt to customers and to, let's say, stakeholders as well, where now there is little track of what's going on. There is no accountability or a lack of accountability. Now, of course, that's happening. But, technologies from blockchain, my point is technologies from blockchain can increase that trust where it's actually a trustless system. And by trustless, we mean that I don't have to trust the person on the other side of the transaction. The smart contract or the technology does that for me. The technology in many ways is infallible. Of course, it can be hacked, there can be bugs, but we have given our trust to big technology Now it's time, I think, through blockchain to take that trust back to us, the users, and where we make the decision on who we're going to trust. And through technology that is decentralized, and we all trust each other, and we all own that code or that common application. So I think that's the way we want to go with blockchain here in emerging markets, and that's why I'm very hopeful that the regulators will see that this is actually a way not to hide transactions, but to make transactions public record so that anyone, anywhere, at any time can see exactly what is going on in the system.
Yeah, I want to soft raise my hand. So speaking of trust, and I'm going to interrupt on behalf of the regulators, right? There must be some reasons why, blockchain is so great and it provides a trustless system. Where is this gap? What is from the policy point of view or from the authorities' point of view, or what is the hesitancy to adopt blockchain?
Gabriel, shall I go? Yeah, okay. No, thanks. So let me combine my thoughts on your previous point and this particular point, but very briefly. I know I have 2 minutes. So first of all, where do you see the need for improvement, trust capital, or the services, right? So if I talk about plain services, because so of course I do cover policy, but perhaps I have this unique hat where I put one foot on the policy side and another foot on the market side, because what my focus on policy and regulatory and institutional work is for development and creation of markets, private and financial sector, right? So I think digital payments is a service which has been taking strong root in Bangladesh. However, it has many more miles to go and many sort of blocks to cover. But what Bangladesh has been missing on the services side are the emerging or diversified sort of fintech services, such as wealth management, alternate financing, and sort of advisory based sort of financial advisory sort of coming into the fintech span. Now, what is it? Where do you see? Sorry, the second question, Gabriel. Can you just remind me this second point?
Where is the gap in trust?
Where's the gap? Yeah, thank you. So I think I see gap in trust from a couple of perspectives. One, I think there is this whole fintech awareness, because it's technology oriented. Because a lot of, as you said from the very beginning, not only blockchain, but there are a lot of aspects in fintech itself, which is unknown to both the regulator, but also the market. I mean, we have many challenges in the market for fintech, and there has been a number of assessments. One common assessment that came up repeatedly is that despite the clear business case of the services, there is a lack of awareness about different aspects of the DFS, digital financial services, or fintech. Now, this lack of awareness apply almost squarely between private sector as well as the policymaker, particularly the market, the market itself, consumer. Now, so number one issue is this lack of awareness and understanding about the full potential and the sort of mechanics of this whole fintech agenda and how it works. Number one. Secondly, I think it was Misha Ali who just mentioned about the recent challenges in some of the tech sectors in Bangladesh. That was more in the e-commerce sector, but e-commerce is a driver of fintech. So if e-commerce get hurt, it does hurt fintech prospects, and it does in general hurt the trust. So what's the problem is about consumer protection and data and privacy protection. So particularly Bangladesh does suffer from a general consumer protection, lack of strong consumer protection framework. And that's where I think when it comes to fintech, where this is dealing with people's most scarce resource, which is cash or deposit or their sort of cash wealth, I think that's where the nervousness is maximum. So until these consumer protection mechanisms are well strengthened, and subsequently, strategic communications are not undertaken in order to allay the fear based on very strong consumer protection framework, which is sort of supported by data and privacy protection, I think this whole trust issue is going to be a problem. So let me stop here. I'll come back in the next one. Thank you.
Anyone would like to add?
Maybe I can step in here or add some additional perspective. I believe what's very problematic in the whole regulatory space of fintech, not only in Bangladesh, but anywhere in the world, is there's a lot of, and we see this every day, there's a lot of lip service regulation, right? So it's basically like regulation that says something nice, and like consumer protection and all these things. I mean, I can say in Bangladesh, like the e-commerce companies, they all need an e-commerce license. You don't need an e-commerce license anywhere else, but you need to have like a license specifically for e-commerce, as well as many other licenses to run your business. But at the end of the day, they give sort of a false certainty to the consumers. And this is something I think would even better if there were no regulations, because if there were no regulations, in many cases, there would be third parties coming up with ratings and information, and there would be community-based discussions about, whether it is maybe risky to buy a product at 70% of its price from an e-commerce platform, whether that's probably, that comes with a certain risk or not. These topics will be discussed far more if there weren't, these regulations, people would be exposed more. You see that in the crypto space a lot. Like I've just noticed yesterday or day before yesterday, there was a new coin was launched, and they just called the coin, I think, Always Pump or something like this. And what they do is they continuously, it's just a group of people who freely release crypto coins, just like Bitcoin, but they're just, like they even stated in their thing, like whenever they feel there's a need to create more coins, we create more coins. And then there are some other people who buy these coins in the hopes of making gains. But obviously this is a complete hyper risk endeavor, but it's very well marked as such by the community, not by any government or any authority. So that is my demand, or my request to the regulators would always be to have less regulations in any mean, and have simpler regulations, but regulations that actually make sense, and have more faith in the marketplace to actually come up with solutions.
Would you say that part of the problem is enforcement of regulations, may not be actually the regulations itself?
Yeah, but then to some degree, yes, you could say that the regulation is not enforced, or it is enforced in such a way that the act of enforcement is can be manipulated. So it can be enforced more stronger towards certain market participants and less strong to others, because there are some mediating factors in between. I mean, that's specifically in the emerging markets. That's obviously the case where you have a legal system that is not as developed, and it's not worthwhile. For example, in Bangladesh, it is not worthwhile to sue someone for 2,000 taka that he or she is not paying. It needs to be at least $100,000 or like 50 lakhs or more that it's worthwhile to go to the court. So
how much is 1 lakh?
So 1 lakh is around 1,000 euros right now. So that's 50,000 euros, you could say. It's lakh means 100,000 in this part of the world. Yeah. So that's the yeah. So 100,000 Bangladeshi taka is 1,000 euros.
Yeah. So it has to be fair, right? The negotiation and the payout of the insurer has to be fair, and it has to be, and that's what I said, right? Low threshold to actually participate into it, right? As you say,
Yeah.
it's not worth it to sue somebody, etc.
Exactly. I mean, so for the insurance companies are saying, okay, like this, why would we, insure this little risk or even give this health insurance? Because we cannot, even if there's a fraud case, we cannot go after it, right? Because it's not worth it to go after such, those little individual cases. And that, what does it result in? It results in much higher prices. So I think the base, like it's crazy. I mean, I compare this because I run an international operation. I know what premiums I'm paying in Bangladesh for my employee insurance, and what and what I'm actually getting out of it. I mean, it's a ratio at the end of the day. It's a ratio of premium versus what you're getting, and there's a P&L at the end of the year, and that in Bangladesh is about, I would say, 7 to 10x the premium I'm paying than I pay in Switzerland for the same type of insurance. And I mean, these are private insurance, are not the government insurance. Also must say, these are like voluntary employee benefit insurances. So we compared these rates, and we noticed. I mean, the thing is, enforcement is a very valid point that you bring forward, and I think that's the key thing, the backbone of it, like straightforward, fast, simple, high-performing court system, legal system. And then on the other side, like there's a jungle of regulations on top of it. I mean, even like in fintech in Bangladesh, you need to, you have regulations in Bangladesh that allow you to do digital signature that let you, that makes you can identify yourself and then sign things digitally. But this is only within the realm of mobile financial services. There's another subset of predefined businesses that can utilize this digital signature, but which are some of the bank, but then other banking services or other services in the industry cannot use it because there is no framework for it. So what I'm saying is remove regulations, make it straightforward, make it the same for everyone, same rate, same rules, and strengthen the legal systems, strengthen the courts, make them fast, make them efficient. I think that would be a demand towards the regulators, and that would like boost business across the world, specifically in emerging markets.
Would you say that besides the regulator, sorry, Misha, would you like to add more?
Yeah, just to add to what Julian said, I think enforcement often is what is outlined as the main issue with, let's say, regulation in emerging markets. That's definitely a huge part of it. But I think another very important factor is that the regulators themselves maybe aren't educated in the technologies that they're regulated, right? For example, let's say the National Board of Revenue here in Bangladesh has a very, very high tax rate on imported goods. So what does that do? That blocks out, let's say, Amazon and these kinds of companies from coming, which you can say is good for local industry, but at the end of the day, who's suffering? It's the customer who has a limited, let's say, selection of goods that they can actually purchase. So I think it's also important that we reach out to regulators, that we in the industry educate them, that we have seminars and sessions together, we listen to their concerns, and we explain to them in layman's terms, okay, this technology is not just a black hole that you don't understand, but these are the different, let's say, facets of the technology, and this is how it works. And that's why we believe that it's actually good for both you as the regulator and as well as the, the citizens of the country. So I think education needs to be there in order for these regulations to make sense. Otherwise, the regulations just seem like they're coming and coming and coming, and there's no real overarching strategy that ties it all together, as Julian said.
I would like to speak on, I guess, behalf of the regulators, even though usually I'm on the rule breaker side. For the rule makers, it's from my experience, I would say, working with some of the companies here in the Asia Pacific region, the regulators are very nervous about what we would call corner cases in engineering, or unknown unknowns. For example, what Julian was talking about in the crazy premiums and how like fraud is basically a cost of doing business, right? Yeah, blockchain could be like a solution for that, but only if somehow it would tie back to some identities or some sort of data interchange that is trusted. I think that blockchain itself is a trust machine, enables trustless transactions. But what everyone is concerned about is that if the data entering the blockchain is not trusted in the beginning, then that could wreak havoc forever, right? And of course, if the blockchain solution is not designed properly, then that could carry privacy issues on forever as well. So yeah, anyone like to add? Maybe the policymaker side? Anyone with feel free.
Gabriel, I think the issue of enforcement and then the instruments to enable a proper enforcement. Now, here again, let me take a step back. Now, what happens and what will happen in fintech sector in Bangladesh is actually a subset of the overall regulatory environment in the country or the culture, or capacity. Bangladesh it's making really impressive progress in many areas, economic, social, infrastructure, even many areas of financial services, right? From almost nothing in digital financial services just 10 years ago, like zero transaction. In 8 to 9 years pre-COVID, COVID is an outlier. So till 2019, it has gone to more than $1 billion, way more than $1 billion a month, and 4.4 million transactions every day. But one area where Bangladesh has to make a lot more progress is regulatory capabilities, right? Regulatory response, regulatory formulation, as well as enforcement. And Bangladesh does have many good laws and policies in paper. And but where the shoe really pinches, including in the financial sector, fintech and startup, is actually what we call regulatory implementation gap. Basically, the letters of the law and regulations say or mean something. The way they are delivered or enforced is actually something else, right? And that's where I think much of the problem between the market players and the regulators arise from. And so the fintech industry or the digital financial services space is no exception, and it does suffer from that overall weakness that Bangladesh has. So one, if you look at the challenges or the sort of issues that require attention in order to unleash the optimum growth of fintech or even expedite that, I think this regulatory enforcement capability is going to be an extremely important one, but it cannot be changed overnight. And this is actually, I do interact with the central bank on a regular basis on various issues. It's not that the one good thing is this is one area where they're aware of their weaknesses. They know that there are problems and they have a lack of both tools and knowledge in terms of proper enforcement, right? So I think if we push them hard on this, they're going to react, in a knee-jerk way, and basically they become more conservative. So one, I think this is where a public-private dialogue is necessary between, digital financial services industry as well as the regulator, whereby I think a short to medium term path really has to be devised, whereby this regulatory implementation gap can be minimized, whereby good policies and laws can be actually implemented with the same spirit so that the regulatory service delivery enables the growth of the market rather than stifles.
Throwing a question out there, what do you guys think about blockchain in the process of regulations, helping to enforce the regulations?
So let me take that, Gabriel, and I'm just gonna second your last statement where you talked about those corner cases. I think that is exactly where blockchain can help regulating a lot, because the blockchains, the new blockchains which are, or I mean, the new public blockchains, if you want, they're basically smart contracts, and smart contracts, or we basically run things on smart contracts. So smart contracts actually means rule framework. So you have rules defined there that are trying to sort of regulate the community that is around these different topics. And you see how complex it is to actually encompass all these different corner cases, as you mentioned. And with regulation, it's the exact same thing. Like a regulation is a rule framework that is being put out there. But it's much harder to test and figure out where are the corner cases or where it's going wrong. Like you have to wait for a few years. You have to do like, statistical work and then see how things develop, whether it was a good or a bad regulation. Whereas in blockchain, it's very instant. And I think the regulators can learn from this or even make use of these tools. Like, why not put certain regulations of certain industries into smart contracts? As in, like how certain settlements are happening, how loans are given, whole DeFi. And I think that's a huge opportunity. Maybe that's an angle to start off with as well. To say that we take certain public areas where governments are responsible to, take care of something, ministries or something, and then like land ministry, etc. We've seen many cases in the teams use those and put a blockchain solution in place instead of having it in a traditional way.
That would be good if a country could just be regulated on blockchain. In fact,
we had decentralized organizations at the very beginning of the blockchain. Oh, yes, we still have, obviously, of course. I mean, these games like Mana, right?
I want to give you a question, Julian, since you're from Switzerland, right? As
Yes.
I understand that the Swiss government is quite decentralized as well. I mean, so decentralized that when you send a delegation overseas, they take turns being president, right?
Yes.
So how is this? How is the Swiss country run, and could it be possible that Switzerland could be run on blockchain? And how could maybe something somewhere like Bangladesh or some other place be? Maybe it doesn't have to be like
Absolutely.
that, but just a thought out there.
Yeah. I mean, I think that's the foundation of Switzerland's success, with being the least bad of the worst in Europe, and therefore being very successful, perceived, is the fact that we're extremely decentral. There's a trend towards centralization very strongly in Switzerland. It's been going on for 50 years or more, and it's like very slowly happening. Yet we can see, I mean, the fruits of the success of Switzerland really lie in this thing. I mean, we have competition among all these nodes, if you will. The municipalities, the cantons, they're fighting for, even better regulation, better laws, better education, better frameworks for businesses to operate, better tax systems, and so on. So they're in continuous competition, and they're looking, what are the others doing? What are we doing wrong? Like, what could we do to become better? And how could we be more attractive to let's say services industry, because we don't want much trucks in our area, and so forth. And also you can also see, just to add to this, that in Switzerland we have very progressive blockchain regulations as well, that allow for several use cases. And we have gone live about 3 months ago with the first actual digital exchange, like an actual digital stock market, the Swiss Digital Exchange, SDX, with about 4 years delay or so, or 3 years delay, but still it's the first one. in the world that trades digital assets completely digitally. We can also tokenize shares of companies in Switzerland already. Yet that's also coming out of decentralization, because some of the cantons have really pushed for that. So the canton of Zug, which is in the middle of Switzerland, is the one that's pushing blockchain a lot. So it's also housing some of the big foundations of the global blockchains. They call it even the crypto valley now in Switzerland. So yes, I think that's a role model, and I think countries can learn from this. It's not bad to have competing regulatory frameworks. You can have Zillas and Upazillas in Bangladesh competing with each other, or in other countries. I don't know how it is in the Philippines, where you have all these islands, right? So they could also have their own degrees of freedom, and then basically come up with the best solution. And at the end, yes, theoretically, you could run the entire government and some of the services on a blockchain. But it, of course, is like a pipe dream, I would say. Yeah, I would hand back with this to you. I think I'm speaking too much.
No, you're not, Julian. I mean, Switzerland is indeed renowned. I mean, in Europe, if you want anything to get done blockchain-wise, you go to Switzerland. So you're very right. It's an example of what we should do as countries. I mean, if we're talking the Netherlands and the regulations, if you want to open a crypto exchange here, good luck. It's not going to happen. And then you have to go through Switzerland in order to make it happen. So yes, indeed, we need less regulation here, and we see that legislation is actually standing in the way of progress. While it should be, in my opinion, embracing it, because it will make it easier to bring to justice those that need to be brought to justice, by making it very apparent who's doing the wrong things, and who is getting a bad track record. Things like, say, for example, identifying people who've abused insurance in the past to other insurances, so that they know we don't need to do business with this person, or give him a very high premium, for example, which is justified, right? Normal people actually want that, because that means for the people that do good, that the premium can go down, right? And that's what we want as well. So yeah, I am hoping to see the authority side here to revoke that. As why are all these regulations and rules necessary?
Would I just to throw in a little bit of a thought? Could it be because blockchain is a digital thing? Well, most fintech is, right? But we still exist in the physical world. And the linkability between physical and digital is sometimes that is where the gap of trust is. Anyone would like to comment on this?
Well, I think, let me just take a different tack at it. I think something Julian mentioned, that even a country like Switzerland is trending towards centralization. And if you look at governments around the world, you see the same kind of trend. So, and not only governments, let's look at companies, the big FANG, Facebook, Amazon. What does this really mean? It means like control of our lives are now in the hands of 10 individuals in the world, basically. Let's be very frank. So I think that centralization is a theme that has been going on for the last 20 years with technology. And actually, it's maybe the opposite of what technology or the internet was originally about. So for me, and sorry to take this on a different tangent, I would, obviously blockchain represents let's say, a reaction to that, a decentralization of control. But I think that's one of the reasons you see regulators and governments are so, let's say, they're not willing to let go of this control, because they feel that they're going to lose control of the situation, lose it to people like Mark Zuckerberg, etc. Again, I think, how do we have a hybrid solution? Because no government now is going to give up control to a decentralized system. Let's be very honest, in 2021. How do we have a hybrid solution where governments feel that they still have control or the controls in place for the edge cases, but that citizens still have, let's say, the opportunities presented by decentralized technologies such as blockchain? That would be a question I would pose to this whole panel.
Yeah. So I think one idea would be to have something like institutionalized oracles, right? Which are basically that connection point of the real world to the blockchain, so that you say, okay, for example, I mean, there are some things that will need a judge, right, to take side or to assess a certain situation. So you could say that, okay, the court, for example, within the real world operates as an oracle, and it's like an accepted oracle, and whatever comes out of it, you know, is instantly replicated on the chain, and therefore is the connection. And the governments could start to say, okay, we have one in the land ministry, we have the court system, we have maybe things that are being regulated, like power supply, for example, where the government is heavily involved in most of the countries. Also recently in Bangladesh, very strongly, with very high subsidies that are going into the power sector. So there are a few, and so there needs to be a price. There's a price control, maybe, you know, like to softly go towards that free spot. And the government, maybe the ICT ministry could do that. You know, they could build a backbone that would be, you know, consisting of these multiple oracles that feed real life data in a very democratic way and well established into these systems, so they cannot be manipulated.
I think oracles is a nice way to start off, because fundamentally there's a lot of trust gaps going from digital to physical. Actually, even without going to digital, that is where the gap exists for the unbanked, right? I think identity would be the cornerstone of all the fintech applications, whether it's blockchain or not. And of course, with trusted identity, you can have trusted identity for individuals, and you can have trusted identity for corporations or organizations, right? Then that would make the environment more accountable. It would be a lot easier to enforce regulations or change regulations even, or at least to do the monitoring, as the insurance authority representative, Mr. Islam, had already mentioned before. I think that is really the main challenge here, the gap of trust. But this is, of course, a very big problem. If it's so easy to solve, it probably would have been solved already. I mean, there's like hundreds of countries around the world all facing the same problem. I think really it depends on the trust assurance level of different roots of identity. So the root of trust, for example, or how they can define like what even an organization is. Those could differ from between jurisdictions or cultures. That maybe since we are in Bangladesh right now, at least virtually, we can use Bangladesh as an example of how a framework like this could make it work.
Well, I don't know how the situation is in Bangladesh, so you have to tell me a little bit more here. How do you look at it?
Yeah, maybe could we have one of the Bangladesh delegates to talk about how does the national identity, for example, that was mentioned a few times before.
Yeah, so let me come in here, Gabriel. I think on this, I'm glad you mentioned the national identity, because it just sort of resonates very well about the point I was hoping to make in relation to the conversation we have been having last 5-7 minutes. Blockchain and where does it add value? How do you use it? I think in terms of the technical usage, Julian's point, have been sort of, could not have been more appropriate. But why do you use blockchain? I think there is a big part of the why that links to some of the addressing some of the constraints and creating trust. Right now, on the trust side, it is the sort of confidence of both the regulators as well as the consumers that the right sort of trail is established, linkages to specific transactions, specific individual stakeholders can be made. But beyond trust, there are two other issues where blockchain can, I'm assuming, help, given my limited knowledge, technology knowledge around the blockchain. Two other success factors of fintech to take sort of off very strongly in Bangladesh are going to be around inclusion and targeting. Now, what do I mean by inclusion? So inclusion would be, and that's where your national ID issue comes in as well. So basically, I think, three areas which are going to be important to sort of give a lift off to this fintech would be, for example, the digitization of government social transfer program, digitization of corporate and private sector salary payments, and so on, right? Now, all of these, and COVID has been a stark reminder of how you really need to reach out to big group of people, the right group of people in terms of transfer of financial support and many others, and also regular market-based payments. And Bangladesh does have a problem over there because there are, first of all, there is a national ID database, which I think at the moment has about 100 million plus, perhaps 110 million, identities over there. However, they are just there in terms of a database. They are not very effectively linked to, delivering services in terms of authentication and so on. And in many services, they are not linked at all. So I think in the inclusion agenda, where you try to bring in everybody who is a potential user and beneficiary of fintech or digital financial services, starts from that inclusion issue, where I think the blockchain can make a big sort of change. Secondly, the targeting. When it comes to transfer of, the social payments, which is going to be an extremely, at the moment, the governments of the total electronic payments that take place in the country, the government does, interestingly, it should have been, and ideally it should be the private sector payments, but at the moment, the government payments do hold a larger share, right? Now and the success of these will actually determine the trust and the success of broader market acceptance of the fintech and digital financial services in Bangladesh. And that's where targeting is a big issue, because often the right people are not included. To start with, inclusion itself has a problem, and that's where the national ID database, linking it to the services and application of blockchain is going to be important. But then in the second step, whether you do have the right targeting is an important issue, because what we have seen that, Bangladesh, which came up with almost 4% of its GDP as the stimulus package since last year, where a big chunk of that was, financing to both individuals as well as, small businesses, right? Now that did a big part of that, perhaps not the majority, but a big chunk of that did end up in the wrong hands. And a lot of that were actually on purpose. And that's targeting and sort of authentication of the targeting. Unless that is done through some technologies such as blockchain, I think that is going to continue to hurt the confidence and keep it low. And then finally, obviously, the monitoring issue. In one area in Bangladesh where I think this monitoring, financial services monitoring that is required is, let's say, domestic letter of credit sort of management, which is to sort of govern the domestic commerce, right? Of course, part of that links to international commerce and international letter of credits, the trade financing instrument as well. And there, in the domestic trade financing agenda, where there is lots of irregularities, it is almost impossible for either the central bank or banks to verify or identify whether somebody is making multiple transactions using the sort of same the same unit or the same opportunity and so on. And that's where I think application of blockchain is going to be extremely important in enforcing the monitoring, and again, thereby moving towards both trust as well as broader services.
Don't you think that because it's apparently in the advantage of some people to keep this these systems out, especially, for example, from the example of the person that got compensation that wasn't allowed to have it, right? So there's a lot of money that went through the don't you think there will be a lot of resistance against these initiatives, because making this transparent is gonna cost a lot of people their livelihoods in one way?
Yep.
What do you see there as don't you see that as a struggle, and what can we do to mitigate that?
Oh, absolutely, Chris. I mean, that is the political economy of any major reform where there is a group who is set to lose their rent. These are the rent seekers, right? So you will certainly see that. And that part of, but the good news is, so the bad news is, yes, there's vested group. Bad news is part of them are linked to the political value chain. But the good news is, I think the financial industry and the regulator itself is not part of that vested group. So that's where you really have an ally to start with. Secondly, I think if you look at unpack the political economy of this vested interest political sort of value chain, I mean, this is really root level politicians who are actually making this issue, who fortunately do not have a lot of say in the central policy making, right? So if we can move to the right, sort of the political ownership at the center, it has to be a top down, unfortunately, right? I mean, it's always good if the policies are not top down, but in this case, it has to be top down, because the bottom up is not going to work here, because where the problem lies in the political network, the vested group here, they are actually at the bottom, where they actually utilize this opportunity by making dummy recipients or pseudo recipients and thereby siphoning off this money, right? So I think the financial regulators, the financial policymakers, as well as the sort of top level policymakers, they do largely remain outside the vested interest regarding this particular one. And I think one really has to leverage that. That's number one. And number two, one has to really also understand, sort of make the case very strongly to the decision makers, the policy makers, sort of the benefit or actually, the fallout of, such system continuing in terms of where, the people are not receiving the, very, very scarce government or public resources being doled out, and thereby the dissatisfaction expanding, the opportunity of, or risk of, the risk of dissatisfaction or discontent at the root level, expanding, ultimately hurting the political agenda of the government. So I think make good use of the allies that you start with, create the awareness that, what is the counterfactual, that if you do not take advantage of this digitization opportunity, what's the problem that gets created for the government and ultimately harms them. And I think it should actually help to address this vested interest, but there is vested interest for sure.
You say top down, but I hear you say as well that the financial regulators are allies here, right? And they're not going to. Wouldn't it be smarter to just start with them? Because if you have them as an ally, and they can prove, by the way, of all of our financial regulators, look at all these track records. They're so clean. They are never in doubt. You should always trust this accounting firm because it's such a good accounting firm. It will basically steer the market itself, basically take over the market, because other accounting firms that do not do these kind of things, and that do not show the record of all their employees and all these accountants, they will lose out. Isn't just start if they are truly our allies. Wouldn't it just be smart to start with them and not wait for the government to approve this or rubber stamp this into reality, but basically you say, okay, let's just go. We'll publish all our records. We have nothing to hide. We are the good guys.
No, of course. That's why I said, the good news is you have these financial regulators who are beyond this particular. I mean, there are other vested interests and the weaknesses within the financial regulatory landscape. However, when it comes to the right targeting and sort of using the targeting for distribution of social support and other support, payments, cash transfers, and so on, the financial regulators do, and in Bangladesh, as of now, do stay out of this vested network. So yeah, start with them. However, the problem is, given the sort of governance scenario in the country, the way policy, the political economy of the policy formulation works, they can start, but they cannot complete. Because in order to bring it in and enforce these and implement this, roll it out in a nice way, in a robust way, they do need the support of several other government agencies who are not going to move, unfortunately, just because the financial regulator makes the case that this is something that's going to be helpful, important. They still need part of the government, the policymakers, whether it's the finance ministry or some other sort of similar part of the government, to come and sort of strengthen this case in order for example, the election commission to provide whatever necessary because they actually hold that national identification database. For the social welfare ministry, who oversee and hold the funds in terms of these social transfers and so on. For the Ministry of Finance outfits, who actually distributes small businesses transfers and so on. So yes, start with the financial regulators. However, not enough. You really need to complete the loop. You need the relevant policymakers as well.
Yeah, Mr. Riaz, I think for me, what I feel is that the financial regulators, they're cautious, they're protecting the citizens of the country, but I find that from what I've seen, they're not very quick at making, let's say, decisions about new technologies, emerging technologies, and often because they are so, let's say, protectionist of the existing system, that I don't really see personally, and this is my own viewpoint, that they are able to, let's say, adapt, or maybe they are neutral, as you said, politically neutral, but that also makes them, in a way, unable to act quickly in making this decision, as you rightly pointed out, because they are beholden to other, government ministries or government authorities. So, yes, again, maybe neutral, but are they really able to make the changes that we need made for this industry to succeed? And let me just end this with a story. I went to a dinner the other day, and my friend told me, Misha, crypto is never going to be legal in Bangladesh, because once it is legal, nobody will be able to see, the government won't be able to see the illegal transactions that are happening on crypto. And what I told him is, actually, you're completely opposite. The reason it will never be legal is because then all these illegal transactions will actually be in the blockchain and visible to the public. So I think, as you said, there are stakeholders here who, and as Christian also pointed out, stakeholders who are entrenched, and until we I don't even know how we'll change the system. It's going to take many years, but I feel like unless it's a top-down decision, as you said, I don't see the financial regulators themselves being able to make these policy decisions without that top-down decision-making coming. And that's just my viewpoint.
Fully agreed. I think what you just mentioned, it basically sort of says we are on the same page. And this is exactly why my last response to Chris was that the financial regulators, their allies, let's start with them. However, given the Bangladesh governance scenario, it's not enough. We need the top-down policymakers involved, number one. Number two, you are also right, Misha, that when it comes to technology, the Bangladesh Bank probably has been the slowest of all regulators in the country. However, there is a sort of upside to that as well. If you can make the case that the technology, see, one of the reasons they have been so slow, that they see risk way too much in analyzing a new opportunity. Of course, risk needs to be seen by financial regulator. they probably assign 90% weight to that when they analyze a new opportunity, right? So when you say that the technology like blockchain can come in and address a lot of these existing risks that you are worried about, they tend to respond more positively, or at least give you the attention. And then, of course, it will still need some time to craft and take to, but it's just how you position that, how you actually put that narrative, and technology to address risk have worked a little faster than technology to create a new product or new market in Bangladesh's case.
So what would you suggest? How should we approach the regulators? How should we approach Bangladesh Bank? What should be our 3 steps that we take initially to, let's say, explain the risks and the rewards of blockchain? What would be your?
So I think first of all is how does it relate to some of the broader national priorities? I think where these regulators, even the conservative ones, they do feel pressured is when you actually bring in a new idea and you actually see a very strong link to some of the national priorities. Now, whether it's financial inclusion or sort of quick support to COVID-affected, entrepreneurs as well as, marginal people, which is a priority of the Prime Minister herself. So one sort of trick is to link it to those national priorities and imperatives, right? Second is, as I just mentioned, is you identify the risk upfront and sort of you highlight to them, how the technology has safeguards in terms of addressing or managing those risks. Because if you leave it to them to identify and make it sort of, understand, either it's never going to happen or it's going to take very long time. So I think a proactive positioning, a preemptive sort of, highlight of the risk as well as, how they can be managed. That's one. And third, what really works well is the global best practices, in countries which are of similar nature. Now, of course, you can bring in tons of examples from London or from the US and so on, but often the central bank doesn't get motivated by that, saying, they have a completely different, context. But if you do bring it from Indonesia or India, or I do think East Asia is working a lot better kind of benchmark these days with Bangladeshi regulators and policymakers. But when you bring in those global best practices, they do really, really help. You ask for 3, but I'll also ask for I'll highlight a 4th. I think with Bangladesh Bank, one has to really manage expectation in terms of how fast you can move. Things do take time, and unfortunately, market players do not have the sort of at the moment. This is the hard truth. They do not have the ability to change that overnight. So one has to really engage between short to medium term.
Thank you for that, Riaz. That was very insightful.
Do you think that there is a dichotomy of a private and public chain that might be one of the issues for adoption of blockchain in fintech in the country?
Who did you direct a question to?
In general, we have some from earlier panels some extreme views as private or consortium chains aren't even really blockchains. But then, of course, if you see in the DeFi space, everything is public chain. On the other hand, governments tend to go towards a private chain solution. So, have any thoughts on this?
Yeah, I think you clearly need to have some public chain infrastructure to start building effective private chains, or at least you need to have private chains that are allowed to transact on public chains as well. Because otherwise it's really just a distributed ledger technology, which yes, you can use, and it's a good thing in a few cases, but to really get the benefits, you need to have public. And what's interesting is actually there's a very latest development now with some of the DeFi protocols where they basically embed privacy on top of the public blockchain. So there are some implementations now out there that basically allow you to sort of to hide your transactions. You will see, I mean, your transaction will be part of a pool of transaction that has happened, but it will not be clear to the public who transacted with whom. And I think that was always a key blocker, but there's a lot happening on this now. Maybe Gabriel, maybe one question from this side. So now towards you guys, I mean, now you're doing this for quite some time, and I believe you're in, I don't know how many countries, probably 10 to 15. How do you rate these countries from a, technology adoption and a blockchain adoption viewpoint? Like, who is leading? We hear a lot about Indonesia, for example. I haven't seen Indonesia being part of this yet.
There's one team this year.
Sorry?
There's actually one team from Indonesia.
Oh, awesome. All right. Yeah. So how is this going? I've also seen very interesting things out of Vietnam. I mean, I've been pretty impressed with some of the projects. How do you rate these countries now from it?
Oh, I'm not sure if you want to put me on the spot to offend the countries, right? There's only one first place.
Or where should we go? Like where should, like, which countries should start to connect or look at, like, I mean, Bangladesh is doing a lot in terms of advocacy and sort of, they want to, right? We want to. I'm also here. I'm also helping. I actually also do some consulting with the government. I consult the SEC, the Bangladesh SEC, and we're trying to bring modern technology to the market here. We're also working with Facet, with Misha here in the call on some topics. But like Indonesia, I see Indonesia has sort of has their own public chain where people are deploying things. I don't know.
Well, suddenly I'm on the panel now.
Yeah, exactly.
No
I mean,
problem.
I understand you cannot assess your, like, it's probably politically.
Here's my main thoughts. If I were to summarize it quick and dirty, there are some countries that are up and coming, right? And there are some countries that are well established, right? For example, in the EU, Switzerland, Europe, right? You guys are well established, right? In North America, we're established, right? Up and coming, South Asia, Southeast Asia. And then there's like the giants where if they sneeze, then it affects the whole world. Like basically the EU, US, China, right? And you can say that financial centers also, if they sneeze, it'll affect the whole world. So London, New York, Hong Kong, Singapore. You would say that these places are probably acting in their best interest to move slowly. I know as a rule breaker, I can understand that we want things to go faster, right? Just break things. What is fail fast, fail often, fail cheap, right? For a regulation point of view, failure is not an option, right? that's from their point of view, right? And especially for those financial centers, if they push some regulation and it goes very badly, everyone's looking to them, and they will affect basically the whole global economy. So the culture of adoption is different for the up and comings and for the incumbents. So that's one angle. The other angle is, as I mentioned, the public and private chains, right? Within existing regulatory frameworks, it is much easier to deploy private chain solutions. And I would go further to even say that there are certain applications that would work on private chains only and not on public chains. And conversely as well, there are certain solutions that work better in using a public chain and not as a private chain. And of course, it goes without saying that there are some solutions that should not even be on blockchain. They don't need blockchain. And that is one of the judging criteria, right? A problem and solution, like the submission, does this really need blockchain? You know, some common mistakes that students make is they end up with like a single party or a party that controls other parties. And then they might as well just use one database, right? I mean, it's more efficient anyways, right? We don't need this blockchain facade. So circling back to your question, the progress is very hard to measure because they are in different places and in different dimensions at the same time. In fact, it's more like quantum state, right? They can be very far ahead in, like, for example, in Bangladesh, it seems like you guys are exploring with blockchain national strategy, right? There's a white paper from the government to talk about blockchain strategy. And on the other hand, then there's some parts of the government they're saying, hey, we need to be very careful with the decentralized finance and cryptocurrencies, right? Meanwhile, the industry is saying, hey, this could actually solve some of the inclusivity problems. So the rule breakers are going straight ahead, and the rule makers are holding back. So this is where a lot of the divergence occurs. In fact, you could even say that the world, if you don't think of them as sovereign countries, right? There is one mega country, which is like the rule breakers. We're pushing the envelope of innovation and what is possible with blockchain technology in general for improving fintech and all the related things. And then on the other side is the huge country of let's make sure that when we push things, people don't get hurt. There's no right or wrong answer here. I think that blockchain's role is to help regulators enforce regulations. How we can, as innovators, provide tools, connectivity, transparency, trust, identity, and efficient and trusted data interchange. Going back to the original story about the fraud as a cost of doing business, right? Actually, because most things are paper-based now, and they're paper-based because this is the incumbent solution. So if this process could be put, not everything maybe, but some parts of it is on chain so that it is provenance. So then governments and regulators could use this blockchain solution to enforce their regulation. And it is also, it will open the doors for, say, the insurance companies to crack down on these insurance fraud, because most of the time this is identity, they're slipping through because of they're exploiting identity issues, or they're exploiting double claim or multiple claim issues, right? So blockchain allows for these parties to cooperate in a trusted manner. And that is basically what blockchain is all about. And once you have this baseline trust and this root of trust, then it would open the floodgates for other fintech innovation. That's my view.
Thank you, Gabriel. Well said. So I would just throw something in on top of that, actually. What I always feel is, we're using this term blockchain. We say we need blockchain regulation, we need this, that, but blockchain is basically an underlying technology that has certain properties. So if I go to the tax authority, for example, and they throw a request for proposal to build a new software system to collect tax, they're not going to debate much, should this be Java based or .NET based, or should it have an underlying SAP core, or whatever it is. They're never going to talk about it. But we always come and we say, and I think this is a sort of a critique to the whole blockchain community, everything is blockchain. And first we need blockchain regulation, and then we basically go in, instead of just saying, hey, here's a solution to your problem. In this case, like what you mentioned, right? Sometimes you need, sometimes you don't. In this case, you need to have cryptocurrency. Like, let's say you need to have a machine deciding who gets what share of the pie of delivering value to a larger group of participants, right? So therefore we need cryptocurrency. And it is a cryptocurrency solution, put it in place. Do not even talk about blockchain or whatever it is. It's just a solution that's based on cryptocurrency. And you can call it DeFi
actually,
or whatever.
Very good
right?
point. I think what you're trying to say, if I want to put it succinctly, right, is sometimes blockchain solutions are solutions looking for a problem. And maybe the solution itself, maybe blockchain is a tiny part of it. And blockchain regulation actually is a separate matter to implementation of blockchain for some sort of fintech solution.
Right. Because we never see it. Like in my business, we say we are creating value. It's all about that. Customers come to us. We want to understand, okay, how can we increase their top line? How can we reduce their cost? How can we increase their bottom line, of course? So, and we try to figure this out. How can we do this long term? And then we use all possible tools. And in some cases, we tend towards blockchain-based solutions. But in other cases, we don't. And I think from a value perspective, it's maybe even more interesting to speak to the policymakers and then make it easier for them to buy a product like Facet, like Mishali, to say, okay, you guys just go and run your business now. What is your business? Okay, your business is an exchange platform. Okay, so it's maybe, it falls under the exchange regulations, the stock exchange regulations, maybe, your securities exchange regulation, you're exchanging securities among each other. Okay, how are you regulated? How does your surveillance system work? Okay, it's distributed ledger technology. Okay, cool. Okay, right. You're meeting that. Okay, we have to change one phrase in our existing exchange regulation to meet that purpose, and then go about it like this, right? And I think, I think this should be the approach to move forward in the space.
Thanks, Julian, for that plug. But I think one of the interesting thing you mentioned is that, yes, we're talking about blockchain, the technology, and none of the regulators have an issue with the technology. What do they have an issue with? It's the flow of capital, right? And so that brings us to that third topic that, Gabriel, you wanted us to touch on, capital. And so I think it's very interesting because at the end of the day, what's going on now globally with public chains, etc., it's enabling the flow of capital into the crypto ecosystem, whereby, if you look at countries like Vietnam who have adopted it, you've got gaming companies in the crypto sphere with a $7 billion valuation, Axie Infinity. You've got a lot of interesting things going on in the DeFi space globally, where you've got billions and billions of dollars, and these are small numbers for crypto companies, that they're able to raise this level of capital relatively, I would say easily, with a good business plan, a good technology team. In Bangladesh, yes, we can say that we've got a great economy that's moving at 7% GDP. We've recovered from COVID. It's been a great recovery, one of the best probably globally. But what are we really doing by not making ourselves part of this crypto economy? We're enabling other countries to benefit from this capital inflow, and we are not benefiting from it. And by staying where we are, and other countries are moving, let's say, forward in this crypto economy, we're actually losing out. And if we compare ourselves and our economic development by not participating there, we're actually becoming poorer in relative to other countries where adoption is higher. So I think that's my take on the whole capital thing. I think, this year has been a banner year for Bangladeshi startups, over $100 million raised. But where could we really be if, let's say, that we could participate in this crypto economy. Maybe that could have been $1 billion. So, that's where I would say my opinion about capital is, and this whole regulatory environment is. Like you so rightly pointed out, money talks. We're all here doing jobs for money, and we should allow that money to enter the Bangladeshi economy. And if this is one way, and if we have to regulate it, then fine. But why leave ourselves out of that and disadvantage ourselves 10 years down the road, where other countries have taken advantage of hundreds of billions of dollars in inflow, and here we are, we're just starting out.
I guess I have one thing to say. I would first preface it that I'm not an economist. So my understanding of this model would be Bangladeshi companies are raising capital because they are creating value by leveraging the cryptocurrency economy. But if the Bangladeshi people are offloading their taka for cryptocurrencies, that's actually a capital outflow. Would that be a concern for the Bangladesh government?
Not really. I mean, that's a huge concern. It's a huge concern, exactly what you mentioned, but it's not really a capital outflow. I mean, at the end of the day, what we're talking about is what I think was mentioned at the beginning as well, is consumer rent. Consumer rent is basically the consumer's welfare in having access to cheap goods. And that's basically what's being hindered by all these regulations. If money flows out in large extents, immediately the production capacity that you can buy in Bangladesh becomes cheaper. Investors will immediately buy up factories and invest in factories, build factories, because it's cheaper to build factories. Land will become cheaper in case that would happen, right? So there's always a balance. And you cannot move a factory to America or somewhere else just because you convert your taka to Bitcoins and you send them somewhere, right? So that's your own thing. And you rather put a little more pressure on the value of Bitcoin by doing that. But but these are all concepts that are not there. And sorry for jumping in here, because this is one of the topics that I'm personally very much engaged in and pushing as well, on the one side as an investor in Bangladesh, and on the other side also as a consultant. And whenever I have the opportunity, I think make this point that actually consumers are losing out at the very first spot, and with that, startups that could serve these consumers and other companies. So, and I think we should only do this in these seminars, and whenever possible, and whenever we get the chance to talk to public regulators, we should push on these topics.
Something that struck me, I don't know, because I'm not from Bangladesh. I have very little knowledge in this area, besides from historical. Do you think that blockchain adoption in Bangladesh is low, like substandard low compared to other countries?
Well, let me cite a report I saw recently, a chain analysis report that came out, I think, in August of this year. Chain Analysis is a blockchain security company that basically is a service for exchanges such as ours, where they, let's say, red flag, addresses that may be problematic, that may be associated with illegal activity. Anyway, they came out with a report with the top economies as far as adoption in the world. Number 1 was Vietnam. Number 2, surprisingly, was Pakistan. Number 3, India, in terms of amount of adoption as the total population. Bangladesh was not even in the top 10 or top 20. Now, is that because even in Pakistan, blockchain is illegal? Crypto is illegal. So I was very surprised to see that. Now, is that because even that the government has such a good hold over the population that no illegal activities are taking place with crypto? Is that the reason? Or is it that it's not measured? So according to whatever statistics we have, Bangladeshi blockchain or crypto adoption is very, very low in terms of, let's say, the region.
Wow, I did not know that. Thank you for that detailed explanation. And you keep mentioning there's something standing in the way of this adoption. If you were to point out one thing, what would that be?
Sure. I think it's, let me put it this way. I'll just caveat by saying I'm a dual citizen in Bangladesh. That's why I can get away with saying this kind of stuff. People get arrested for trading in crypto in Bangladesh. So it's happened at least 4 or 5 times this year, where the intelligence services have gone to people's houses or offices and arrested people for trading in crypto. Of course, they were enabling others to trade in crypto. So I think that's a large part of it. Another is our capital control laws, where there's no legal way to get funds, your personal funds, out of the country. So, there's no way for people to, onboard fiat onto crypto. So I think these two play a large part in that lack of adoption.
Chris, let me add to Misha's points. What's holding it back? I think Misha articulated very eloquently. Two sort of broader environment issue which comes into play. One, Misha's last point, the capital control he just mentioned. Bangladesh has done pretty well in terms of its macroeconomic management and stability, right? Particularly, it's managing the currency sort of value of the stability. It is a net import-dependent country, so it is really important what its currency value is, but at the same time, it has to balance well because export-led manufacturing is overall mainstay of the economic activities. But there does exist sort of very old mindset in terms of managing the capital account, and thereby enabling how open they are in terms of enabling capital inflows and outflows. Of course, in terms of inflows, since the country require a lot more capital than it does have domestically, it's more welcome to the systematic means, right? And of course, it does come beyond systematic means as well because of the red tapes and other inefficiencies. But when it comes to outward flow, the mindset is absolutely blocked. Absolutely blocked. There is no, as Misha said, there is no legal way for businesses, Bangladeshi businesses, to take out money from here. They have actually allowed on a case-to-case basis, perhaps 5 or 6 cases in the last 5 decades, all of which happened in last perhaps 5 years, where business groups of very high reputes, have been allowed to take out perhaps $1 million or $2 million in some cases, whereas the revenues of these business groups are in excess of $1 billion, legitimate tax-paying or sort of tax transparent transactions are. Now, where does it come from? It's again, a very old mindset, a lack of confidence in the sort of the evolution that the Bangladesh economy has gone through and the maturity it has come into. And thirdly, this very sort of paranoia that there can be a capital account collapse, and which then can go on to hurt the entire import ability of the country, which hurts consumer, which hurts industry from the raw materials. I personally think they're unfounded because Bangladesh has evolved a lot more. Just to give you one example on the personal, individual sort of foreign exchange expenditure category. When Bangladesh had a $5 billion foreign exchange reserve, Bangladesh had, or perhaps $7 billion foreign exchange reserve, Bangladesh had the ceiling of $7,000 of foreign exchange spend per capita, per citizen, right? When Bangladesh sort of increased that to almost 7 times, or almost 7 times, Bangladesh's foreign exchange reserve is now in excess of $45 billion. And Bangladesh has only increased that per capita expenditure to $12,000 from 7,000. So this is just a sort of example of how conservative the mindset is. It is an unfounded fear. It is an reluctance of relying on somebody's own capability. I refer to the economy, and the lack of I would say from the top, the very political top has also never pushed for such capital account liberalization in the country, because I think that technocrats do actually reign in this domain.
100%. That's the reason. The capital flight controls. That's the number one reason why blockchain cannot be that's in the way of the adoption of blockchain, because of cryptocurrency, which runs public blockchains. And this is this thing. I mean, I would like to discuss with Professor Rias. You know, like what I mentioned before. I mean, Bangladesh is a services. I mean, it's a labor-based. It's successful in the global economy because of labor and services production, assembly, etc., textile. And when you're saying, okay, it would be detrimental if the Bangladeshi taka would slide, I'm saying it cannot slide just because of the fact that we have this production, these enormous production forces in Bangladesh. Right, so like you would immediately have a surplus in foreign investment or in foreign currency investment the moment the taka devaluates more than what would be expected, or more than what would be considered, you know, sort of normal, like how currencies fluctuate.
You want my thoughts on that, Jimmy?
Yes, please.
Oh, okay. Oh. No. Because I didn't say it was my opinion. I didn't say it was my. It's not my opinion that.
Yeah, but what would they say? I mean, what would they argue? What would? I know it's not your. You said it's not your opinion, but
it's the consumer welfare. Is the consumer is the inflation, particularly inflation and consumer, because Bangladesh, despite its very successful export performance and export sort of led growth of the export led manufacturing, it is a net import dependent country by actually a large margin. Yep. So, and that is why I think the country, I mean, you know, even to date, a big part of the agricultural inputs, which if you start from the very basic, the base industry, a big part of the agricultural inputs are imported. The raw materials for the ready-made garment sector, a lot of them are imported. And most raw materials for most other industries are actually imported, because Bangladesh does not, it's a small, you know, the land, it's a small land person, right? It's very rich on agri productivity, but it is not very rich on mineral resources or other resources, right? So it does have to rely on a lot of input. So they're worried, the policymakers who try to keep a stable value of the Bangladeshi taka against the dollar or other major trading currencies, is that this net import dependence of the country really is vulnerable if the taka is allowed to slide beyond a certain.
But
so that's the only thing.
But would they? I mean, because net import is something that is measured, that is technocratically measurable, right? But you have so many other effects, like you have the appreciation of capital, as in factories, land, production capacity, which appreciates against global currency, against the US dollar, right? Because of efficiency gains, etc., and because in case there's less demand for taka, labor becomes even cheaper, so those production capacities become even more attractive. But these things are not measurable, right? So there is sort of a capital value expressed in US dollars that is not measurable. Now, when you discuss with the policymakers, do they understand these aspects of the whole system that, like,
unfortunately not.
Okay.
Unfortunately no. I think what sort of almost overwhelmingly occupies their thoughts and concern is inflation, and then consumer welfare, and the ability of the industries to bring in their inputs and be able to produce and then sell in the domestic and export market. That's one. Number two, I think perhaps you were alluding to, I may be wrong, but perhaps you were alluding to that point that if taka is allowed to depreciate even further, I do think some more a recent depreciation has taken place in taka in last 6 months, and tiny, right?
Tiny, about 1.3% in the last 6 months.
But I do think a few more percentage is actually in order, right? Given everything where things stand at the moment. But what you were alluding to, if I'm correct, is that if Taka is allowed to depreciate, you have a greater value proposition for foreign investors in terms of their affordability of labor as well as capital, land.
Exactly.
And so on. True.
Yeah.
I think true. But
I mean, I earn money when it slides.
Yeah, that's true,
Like,
Julian.
as a
However,
business,
the problem is this is not the only determinant of the FDI, the foreign currency fluctuation, and thereby making things more affordable. Bangladesh's overall investment climate, where the quality, the consistency, the predictability of the policy and regulatory framework, I think most businesses, domestic and international alike, would agree is yet to catch up with its potential, right? Or where they should have been by now. So what you're saying is one aspect of that. Yes, it does make things a little more attractive, but then foreign investors would come into the country depending on many other incentives, if I may call them, whether it's a regulatory incentives, the predictability, the consistency. I think somebody was mentioning the tax framework, right? So if you really want to, scale out Fintech in Bangladesh, can you do it with 69% import duty on fireworks or 66% import duty on the? So there are many other policy issues that need to come in to support.
Yeah,
but yes, eventually it will help.
Yeah, I see that, but in the holistic terms, it doesn't actually even need to be a foreigner coming and investing their currency. It can just be that production capacity becomes so cheap that the export volume automatically goes up. On the market.
For domestic entrepreneurs, not necessarily. For domestic entrepreneurs, not necessarily, because when Taka depreciates, certain things become more expensive for the local population, including the entrepreneurs, right? Particularly anything that need to be imported, right? So, and in general, the inflation will go up, but inflation going up to a certain percent can be always helpful. I mean, if you are growing, inflation is expected to go up a little bit. Now, that's, if this can be kept under a manageable or rational level, I think it can still help. But I think the depreciation of Taka will help exporters for sure. Depreciation of Taka can help foreign investors in case the overall investment climate improves. But somebody who's a purely domestic producer, it may or may not help. It would depend on the specific case.
And maybe I can add one additional thing now, again, from your side. I mean, what I see and what is happening actually is that Bangladesh is opening up the economy. And you see every year those limits of how much money you can take abroad, or every 2 years that gets increased. And I think what people are saying in the policymaker realm is that it just cannot be done in a shock. Like if from one day to another, it has to go like gradually over a period of 10 years. And then somewhere in the middle, there might be the point where we can say, let's bring, we can embrace cryptocurrency as well.
As a teacher and developer of these things and seeing your problems, I just have the idea that you should try to envision the future to make it become reality. So my question would be, what would happen if a blockchain solution would enter Bangladesh, possibly from the outside, right? So not developed in Bangladesh, because apparently it can't take root that way, but would come in from the outside and come into Bangladesh and spread. What would happen to the country as a result, if you would speculate?
I think the problem is, as a consumer, you wouldn't be allowed to participate in that. You would be conducting a criminal offense if you would, participate in it. However, I think it already happens. I mean, there's also a very big gray market of money moving outside of the country through so-called hundi system. Everybody knows this. It's basically a common term, but it's actually a very it's a very illegal conduct, but it's happening throughout, and I think it started in India as well, and then sort of got established. So you're as a Bangladeshi, if you need an ATM, you do not go to a typical ATM, you go to the next Indian restaurant in any city. So there is like this kind of thing is already there, and there's also a crypto. I think there's some gray space, but it's very uncertain. And I think what also is done is like protocols, you know, can be limited by the ISPs. I see that in the UAE as well, where I also have operations. In the UAE, certain protocols are simply blacklisted, like voice protocols specifically, but also other ones. So it's it's not that easy. it's not that easy as you would think from a European standpoint.
Yeah, exactly. I'm flabbergasted here. You know, I'm hearing a lot of new things here. Hundi system.
And I'm saying that nobody can say. I can say that because I'm a foreign investor, or I'm a foreigner. But that usually it's a no topic, and it's not appropriate actually to say that in a meeting like this as well. But
okay,
I'm just giving you an idea as foreigner what is actually happening, and that there's a lot of this kind of sort of criminal activity, gray zone, not black market, gray market, I would say.
But to poke your mind a little bit more, right? So let's say this is no suddenly, for whatever reason, this is no longer stopped, right? The regulatory authorities, they start to cooperate, or at least they don't catch the nasty blockchain before it takes root everywhere, right? What would happen to the country, specifically we're talking to, handling, say, for example, unfair implementation or of insurance, say, for example, right? That the bad regulators are caught and taken out.
Sorry, I think we have to
what
stop.
Would happen?
I think
really?
Gabriel has asked to stop. Yeah, I'm sorry. Now when it gets interesting, right? Just one last thing. I mean, Bangladesh is moving super fast. I mean, it's one of the most exciting places to be at the moment. A lot of things are happening, a lot of investments and many activities, and the regulators want to change it. Question is just how can we make them or help them to change it faster?
I absolutely agree. It sounds it sounds indeed like a really interesting opportunity for here in Europe. It's an interesting, we talk about efficiency or stuff like that, making things move faster, but here it can actually solve systematic problems. So that's why I thought, just envisioning what this technology can do for Bangladesh, especially like what Misha also said, is it could transform Bangladesh's, and it looks like to me, it could transform Bangladesh's economy really here, and make the lives better for everybody. And every government, regarding what kind of government it is, wants that, right? Wants to make the life of all citizens better, more productive at least. So it can yield more taxes, right? It's not just because of kindness, but also because, taxes.
So in conclusion, everyone loves money, especially the government. And I think the organizing committee would like us to wrap up now. So final thoughts is, well, actually, is Mr. Islam from the IRDA, are you still with us? Would you like to give us some final thoughts if you're still around? You've been very silent throughout the discussion.
Yeah, because one reason is that I'm not an IT expert. That is one thing. And also you were talking about blockchain, and I think I once read about it. It is about a system that keeps all records, and there is no way to make fraud and something like that. So I don't know much about blockchain and how it is used by the government or by the regulator can benefit the government or the organization, the regulating organization. I can understand about fintech, use of insurtech, or in our case regtech. Maybe a little bit of that, but about blockchain, since people in the regulatory positions still not do not understand the use or benefits of blockchain. Also, let me point out one thing, that use of IT and use of these platforms, financial platforms, they have great promises, and has been is being used for service delivery or payments or distribution of the delivery of financial services. But it also has great problems, as you can see in the case of e-commerce, like some big companies in Bangladesh, they had their ads and everything in newspapers. So we can see ads in around the city, and then such one fine morning, this very big company offering huge discounts, they fall flat on his face, because they have done they didn't follow the uh, proper business rules. So what about blockchain? How it will, how it can, does it only have the benefits and no problem? As you were pointing out about cryptocurrency or capital flight, I don't know. Maybe that could be one of the problem that is holding the policymakers back, and also, as you people were discussing about inflation or depreciation, it all has, if taka depreciates, then exports gets more less costly, and there is a benefit for the exporters. But that has another effect on inflation and also the consumers also. So the policymakers or the central bank, including the finance ministry, they try to strike a balance between these, the benefits and costs and benefits. In case of blockchain, I think the concerns will be like this also. For adapting insurtech and making the data of insurance companies transparent, available to us, that is one important question, and we can support that. But the question about using blockchain in case of government financial decisions, I am not really, I don't have that kind of understanding yet. So that is one problem. So yes.
Yes, thank you, Mr. Islam, for your closing remarks. Thank you, all the panelists today, for taking the time to have this discussion with us. Dr. Reyes, are you still here by any chance? I know you have a meeting very soon. Oh, he might be in his next meeting right now. Organizers, do we need to stay for a photo or anything like that? Hello, organizers? Well, I guess a video is a motion photo, right? I'm sure they can take one of these frames. Well, once again, thank you very much, rule makers and rule breakers, for this fascinating talk on fintech. Please enjoy the rest of the International Blockchain Olympiad online. And yes, see you, and feel free to connect with me on LinkedIn and elsewhere. Thank you. Ciao, guys.
Thank you, everybody. Great discussions.
Appreciate. Same
Thank
here.
you.
Thank you.
Bye, guys.